Boom. All right, what's up, you guys? It's Royce Jacob. Welcome back to the channel and welcome back to the lab. Had an amazing week out of town, but it feels great to be back home and get back into the daily routine. It also feels great to see that some of the bearish predictions we've been having are finally starting to come to fruition as we close out a very volatile trading week. So we will be heavily focusing on the macroeconomic backdrop right now, talking fundamentals. Of course, we will talk technicals as well. Talk to you guys about where I see the S&P 500, the SPY, the NASDAQ 100, triple Qs going over the past few weeks. You got a little price target teaser right here. I think next week, given the fact that once again we have a 3-day weekend ahead of us, compressed trading weeks, so 4 days instead of 5 days, tend to be exceptionally volatile on top of the volatility that we've already seen. So I do think next week will be bloody, but on top of the downside price targets, I do want to talk to you guys to hopefully give you guys some sort of takeaway, some tangible way to apply this knowledge to hopefully making some money. I will talk to you guys about how you can play crashes and certain ticker symbols, certain names that you can pick up and add to your portfolio if you're interested, that will appreciate in value as the markets go down. So as the SPY and triple Qs go down, there are certain names that you can add to your portfolio that will see green, like VIXI right here. Good example, simple example is good old VIXI, up 2.5% today, over 2.5%, while the SPY and NASDAQ were down. Okay, so we'll talk a little bit about that as well. Again, you guys have probably heard me talk about this before, but if not, want to give you guys something to take away. I want to let you know that there's always a bull market somewhere, even in the case that that bull market is shorting a bull market, okay, or short upside. Okay. So we will talk technicals as well. I'll lace in how you can make money once again. Pretty much already gave it to you, but we'll talk more about that as we go over the charts again. Obviously have this article to touch on right here. There's a lot going on in the macro, in the geopolitical landscape, so we'll read through this, just everything that's going on, because again, the fundamentals, I wouldn't be as bearish as I have been lately if the fundamentals were not also extremely bearish on top of bearish technicals. Okay, so there are very few arguments for the upside. If of course you guys do want to know, again, I'll give you guys a little hint as to how I'm planning on making money over the duration of this downside within the equity markets. But of course, if you do want to know literally my exact positions, exactly how I'm trading personally on a day-to-day basis, complete portfolio, daily newsletter. I do update this every single trading day during market hours. So want to know what I'm trading, want to know what my portfolio consists of on every single day, want to know what I'm getting into, want to know what I'm getting out of. Complete portfolio daily newsletter, exactly as it states. $15 a month, $40 for every 3 months. First link down below. And of course, on top of, again, my entire portfolio, you get the daily newsletter where I rationalize my thoughts and explain to you guys why I'm doing what I'm doing. Little example of that is the intro to the newsletter that I sent out this morning to close out the week. Also sums up some of my thoughts on the macro. So we'll read through this guy. We'll take a look at this just to catch up on the fundamentals, because we have to establish the fundamentals first, and then we'll close it out talking some downside price targets. And again, talking about how you can potentially make money in the very likely case, in my opinion, that the markets do continue to see more downside. Okay, so as we've been saying, there are very little arguments to be made for further upside given the current macro backdrop, and it only makes sense to me that investors will continue to de-risk until there is. If you're not a buyer, you are a seller. So always remember that, okay? Remind yourselves of that. If you're not wanting to buy, if you're questioning the fact, should I buy this? Whether or not you should buy an asset, then you're probably a seller. Okay, maybe you're not a seller. Maybe you have conviction around things. I feel the same. I will always hold certain positions in my portfolio that I'm a long-term believer in. But again, being a trader, being an investor, swing trader, I guess, my job, my responsibility financially to myself and you guys as well, because I make these videos sharing my actions with you guys in the portfolio, of course, is to optimize my gains. Okay, and that's what I'm trying to do right now. That's why I'm feeling sharky. That's why I want to take advantage of this downside. While the rest of the market is falling, it's kind of messed up, but it feels better when the market's falling to be making money while the rest of the market's tanking. That's just my sentiment. And again, that's the game. That's the game of being a trader. There's always a winner and loser on both sides of the trade. So you have to remember that. And again, if you're not a buyer, you're probably a seller. Okay, at least in trading terms. Also, President's Day is on the 21st, so once again, we have a 3-day weekend ahead of us. Compressed trading weeks bring heightened levels of volatility, considering The indices just saw their worst days of 2022. Thursday, the Dow saw its worst day of 2022. And again, I feel like that's just a taste of what's to come. I feel it's only reasonable to expect that momentum to continue into the 4-day trading week. Let's get ready for Shark Week, team. Okay, so once again, if you guys want one of these bad boys, you want my updates every trading day during market hours. You don't want to wait till later in the day for a video. Check that out. Also do give out some exclusive videos on this as well. Private links to exclusive videos just to you guys. So it means a lot if you check that out. If not, though, no worries. Let's dive into this. Go over a few fundamental points in a little more detail, and then we'll dive into the charts. And I'll talk to you guys about how I see the rest of the month of February playing out, maybe even heading into early March. Okay, so Russia's Ukraine threat. Oh man, I wish it was still here, but we have to go to CNBC. Go to the homepage because this was breaking as I started the video. Unfortunately, it kind of left. But right here, Biden believes Putin has decided to attack Ukraine in the coming days. Again, just as I was prepping this video, it was at the top bar. It makes it look a little more ominous. But you know what? I'm not trying to. I don't want to instill any sort of fear here. I really, just right off the bat, the whole Russia-Ukraine thing, I'm not sure exactly what impact that will have on the U.S. economy and consumer demand, at least in the U.S., which obviously reflects the U.S. equity markets. I get the oil and stuff. I get kind of general geopolitical tensions. But this, on top of the Fed raising rates, is just creating a very uncertain environment. And obviously, investors, especially coming off of all-time highs, do not like uncertainty. Okay, so I don't know why the heck these didn't stay highlighted. That usually happens, but I'll highlight them myself. Boom! That's how I highlight things if you want to know. Tensions between Russia and Ukraine dominate market focus in the week ahead. Analysts are also watching key technical levels for stocks during these volatile times. Boom. Went away over there. All right. It's a busy week for economic reports, and Friday's personal consumption expenditures inflation data, which is watched by the Federal Reserve, is among the most important. That was a weird sentence. That felt weird to read. Anyway, close it out. This is the final rush of earnings season, with Home Depot, Macy's, and other retailers reporting, as well as a group of energy companies such as Occidental Petroleum and Coterra Energy. Okay, so earnings. Just covered the Fed. We've been talking a whole bunch about the Fed raising rates. The Fed finally drawing their sword. Some forecast 6 to 7 rate hikes this year, maybe even into 8. So that's not good. Again, Fed rate hikes obviously strengthen the dollar. We can take a look at the dollar after the charts as well. Strong dollar, weak everything that trades against the dollar, because the dollar is the U.S. global reserve currency. And obviously, the dollar gains strength. The dollar is in higher demand. That creates lesser demand for everything else, the SPY, the Qs, especially inflation hedges like Bitcoin. Okay, so again, the final rush of earnings season. And I'm not even going to touch on the Russia thing again, because again, that's the primary argument there in my mind. The primary bear argument there is the fear this instills, okay, and just the general uncertainty that this instills in an already uncertain investor landscape. Okay, investors are already feeling pessimistic. Investors are already feeling scared, and if Russia attacks Ukraine, although it may not have a very, very direct, significant impact on U.S. equities and U.S. companies, it just creates a very an even more fearful environment. So people are scared. That's to sum it up. But earnings have been gnarly. Again, Facebook, PayPal both taking 20% on earnings. Of course, Google, Amazon did all right on earnings, but not good enough to warrant more upside. So I've been saying this a lot in the newsletter. I'll keep saying it. There's just so little reasons that we should see more upside right now. And again, as I said in the little newsletter, until investors have a reason to until investors feel that there is reason for new all-time highs, because we're still, if we just get a price range right here, we're still not too far off of previous all-time highs. Okay, the last all-time high was at the beginning of this year. Currently, we're down less than 10% from our all-time high in an economy that is obviously slowing. Again, some some retail, some more legacy players have been doing well, like Amazon did well, but Facebook and PayPal are lagging indicators of what's to come, because they handle money directly. They control ad spend. So if ad spend is down, if money isn't moving as much through PayPal and whatnot, through Venmo, etc., that is probably a sign of the times and a sign of what's to come when it comes to spending in other areas of the market, like Amazon, etc., etc. Okay, so I'll just say that earnings, freaking DraftKings announced earnings today. I think they closed the day down like 21% or something. So everything is just slowing down. Okay, everything is slowing down. The markets are finally starting to catch up. People are still losing money. There's so many arguments for more downside. And again, just when there's geopolitical tension in the mix, that's just the cherry on top right there. Okay, so another cherry on top before this, the fact that the SPY right now and triple Qs, which we'll look at after this, the SPY and the NASDAQ, are both at strong sells on top of very bearish fundamentals and technicals, which we'll get into. This is always the cherry on top, you guys. I never put a lot of weight on the good old TradingView bull meter, but I love to see this. And as far as cherry on tops go, that one is scarlet red. So love to see that. Regardless, let's get into some technicals. I'll get rid of these because I know they're going to get in the way. But right now, SPY, Fridays of recording. SPY has officially closed both a daily and weekly candle within its descending channel. Okay, so boom, right here. I love this. This is where I called this. And again, shout out to you guys. I bagged up on hedges when we saw this little move to the upside right here. So big move down. Again, that initial scare we saw in late January, followed by the relief rally, the dead cat bounce relief rally that we've seen over the past few weeks. Bull trap. This is a textbook bull trap right here. Came up. Whoop, don't want to do that. Came up, played out this little ascending triangle formation, which was actually a bear flag because it was followed by a large move down. Bear flag, evil twin of the bull flag. So strong ceiling right here, successfully broke to the downside of that bear flag and is now once again closed the daily and weekly within this descending channel on top of the daily stochastic RSI, these red and blue lines that you can see at the bottom heading straight to the downside. So this tells me, again, on top of the fact that next week is a 4-day trading week, that it's extremely likely that we do see continued downside over pretty much the entirety of that week. Maybe we see some short-term upside. Maybe we see some little breaths of fresh air here and there. But I think next week is going to be bloody, and I do think that by the end of the month, so March 1st, we're going to be talking March 1st targets right here. And I will be covering Bitcoin in the next video, talking about why Bitcoin is probably going to be sub 30K on March 1st. But that's for another video, so stay tuned. Anyway, I do think that we will begin to make our way down, and this is conservative too. This is more, I mean, this is conservative right here. Keep in mind, a lot of traders are actually going to be looking at this trend line right here, though, because this is a line of support, touch point here, touch point here. I'm keeping it a little more conservative and just going like that, okay, because this also falls in line with my 390 to 400 target. All right, so I do think we'll test the line of support on this descending channel on top of reaching this target that I've had in place for a long time, which is this high set over here. You could use this high as well. Hey, just where we were a year ago. So a year ago, February 16th, this February 20th area, we were at 390. So you know what? I'm on the fly. I'm going to change this to 390, and I'm actually going to go right here. So actually, that doesn't really quite make sense. That would take us, no, you know what? Boom. This would take us, if we do it a little more by the book, this would take us to a whole bunch of intersection of short, long, and medium-term time frames and historic levels that have acted as ceilings and floors in the past. Just again, when you're going up, when you're going down, that's what you look at. You look at historical areas of both support and resistance, ceilings, floors. That'll take us down to about $395 on February 28th by the end of the month. But I do think that I personally believe it's inevitable, and always know, you guys, my money's where my mouth is, that we see a sub $400 SPY over the coming weeks, okay? And again, right off the bat, SPXU is an ETF that trades against the SPY. If you just hold shares, you don't have to short anything. I'm personally shorting some things in the market right now that have been printing. And shout out to the portfolio newsletter. You guys know what those are. But if you guys just want to pick up some shares of something, VIXY, VIXY, that plays the VIX. So the CBOE volatility index, when the S&P 500 goes down, the VIX goes up, vice versa. SPXU is an ETF that shorts the S&P 500. SQQQ is an ETF that shorts the NASDAQ or the triple Qs. So there are things you can buy. You don't have to short things. You don't have to buy put options. You can just buy certain things. So SPXU, SQQQ, and VIXY. These are all ticker symbols you can look into. Not telling you to buy them. Always make your own decisions, obviously. But if you're interested in potentially making some money, in the case that there is further downside, those are ways you can do it, okay? So that's that. Let's take a look at the QQQ talk, some downside price targets here. Again, this is textbook on top of like bull trap, textbook bull trap right there following the breakout of resistance. Love to see this. Yeah, pretty much the same story, slightly different chart here. But I do think that the NASDAQ will fall a little further. That didn't sink right there. So I do think that the NASDAQ will fall further. Again, it is in a very textbook descending channel, and I do think that we'll see at least 10% of downside here to retest this high that we saw back here in September of 2020. That's really a level that comes to mind for me. I do think we could see a little bit of resistance here as well. So I do think regardless, the NASDAQ will see at least another 6% of downside come down here to about 320. But I'm just going to stick with my guns here, and I will say that if the NASDAQ does come down here and test this conservative line of support on its descending channel come the end of the month, February 28th, that would take us down to 308. And that's right between the two levels that I've been eyeballing for a while. So I do think the NASDAQ will see another 10-ish% of downside. Let's close it out with the DXY because, again, you guys, a big reason it feels good making money when the market's going down is because it's likely the DXY is going up, and the money you make, those dollars, those profits that you're taking home from shorting a bull market are literally worth more because the US dollar, or the DXY, again, the US dollar weighted against a basket of other international fiat currencies, is gaining strength. Okay, so dollar gaining strength at the same time you're making dollars while everything else is losing value. That's just the beauty of shorting a market sometimes, okay, because those dollars are literally worth more. Dollar, not going to spend too much time here. Beautiful ascending channel, just based off support. Daily Stokes are the exact opposite, curling to the upside. Geopolitical tensions, Fed raising rates, strengthening the dollar. It's very, very likely to me that by mid-March, the dollar at least comes up here to test the top side of resistance on this long-term ascending channel. And hey, maybe we're even on our way back to triple digits for the DXY. Okay, so that is that, you guys. Let me know down below what your current thoughts are on the overall market environment. Are you short the market? Are you long the market? Are you not doing anything? You have cash on the sidelines, because that's perfectly okay too. That's what a lot of people have been saying in the Discord, and it makes me very proud. If you want to join the Discord channel, $10 a month, that subscription is there as well. That link is down below as well. So go join the fam, hop in there every day, talk some shop, talk some story. And anyway, we were saying, or a lot of the people in there have been saying, how they just have cash on the sidelines and they're just waiting. They're not rushing to make any decisions. That makes me very proud, and that makes me very happy, because a lot of times that is the wisest decision you can make. The wisest action you can take is inaction. Okay, you should never feel rushed to make trades. The worst trades I've made in my life were when I felt forced to make trades, and when I felt pressured and rushed myself to make trades. That's when I lose a lot of money. Okay, so never feel forced to make trades. Never feel pressured. Again, even if you think it's going down, but you don't really want to play the downside, you don't want to play that volatility, just cash out and wait for a time where you feel confident adding into your longs, because I'm very excited about that, and I'm excited to be a bull again. But again, as a trader, it's my financial obligation to make as much money as I possibly can with the data set I have available to me. So I'm doing exactly that, and I'm excited for what I believe will be a bloody week ahead. Hope you guys are ready. Stay on your toes. I'll see you guys over the next couple of days, because I've been gone. I want to bang out some content. So catch you guys soon. Until then, always remember, take action, make waves. Peace.